Okay, folks, welcome to Market Trends. I'm David Russell. It's good to be with everyone. So let me just show you some disclosures here very quickly. So basically, this is kind of a combination of some of the previous sort of webinars I have done. I've cleaned things up a lot and I think made it more, kind of better and up to date. And I'm excited to be able to do this. I'm going to be doing it every Thursday afternoon, so it's great to be with everyone. Most of the indicators, the zip file I'm giving you, you will have seen before. If you have already taken some of my indicators and customized them yourself, you might want to be careful to not re-import them and overwrite them. So I just wanted to tell you that we are going to be looking at some ETFs here, and I have included a special feature in all these workspaces that if you want to see the standardized returns, they are provided with these special customized indicators. So I wanted to just let you know about that. So these are some of the things involving ETFs, and also there is a link to the different prospectuses. Now, if you're on TradeStation.com, go to research and go to insights, and then we've got right off the bat, this is the blog that I run here on TradeStation. And there is a blog post that is going to contain most of my talking points and the key points I want to cover in this. So just go ahead and use that as a point of reference. Also at the bottom, there is a link to the download. So going forward, it's gonna be a lot easier. We're not gonna just be sharing zip files in chats. We're gonna be having them in one place on the website. We can go and get them and everything like that. All right, so I'm going to just kind of start out by working down this list of items. There's a lot of interesting things happening right now. As we kind of start, I mean, I wrote this all last night, and if you look at the S&P here, let's go to my to this workspace. So basically, the price chart in the story that's on the blog it highlights a few things. This downtrend line, which we've broken, some very strong breadth of the advanced decline line, and it shows that we're nearing a golden cross of the 50-day moving average. So that actually did happen today. So there's another variation I have of the same chart. And what this basically does is this shows the 50-day moving average divided by the 200-day moving average. So you're basically looking at a ratio, and it's plotted here. So what's interesting is if you kind of click over it, you'll see the thing at the bottom where it says plot one. It's a red number, red number, red number. At the very bottom of the little dialog box, it's red. Now it's green. That means that the cross happened. So this does not show the moving averages, but it actually shows the crossover. This is just another little tool I use sometime, but it's kind of interesting. So you don't have to be kind of zooming in and seeing is it above or below or whatever. But this is, I think, a very important sort of chart just to follow up on and to see the way this is kind of working. Now, this includes the advanced decline line, and there are similar tools in the workspace that I've given you called MT Breadth. It's essentially a slimmed down version of this chart. So just so you understand how that works. By the way, if you're not entirely sure exactly how this works, I will very quickly show you. If you go to, here we go. All right. If you go to the zip file that I share with you, you'll open it up and it will look like this. It will have another folder inside of it, and then it will have a series of indicators. IPO tool is just a little one that we're going to use down the road. And then MT indicators. This one has a whole bunch of items in it, like I said. Now, and then it has a series of workspaces, which I have opened up down here. So I wanted to just kind of show that to you guys. This is how, and then what you would do is you'd make sure that you load the indicators first. You like double click on them. Most of you guys, I think, probably already know this, but you'd basically go to import, and then you see all these indicators it wants to bring in. I'm not going to do that because I already have them. But basically, you would import them, and after you import them, you can then open up the individual workspaces, and they will work correctly. Some of these workspaces will not work if you don't import the indicators. Most of them will not work. These have a lot of custom indicators in them. So anyway, this is a special one I just created because I was working on an article, and I realized it was really useful. I'd like to be able to show this squeeze of the moving averages with the market breadth. This is the advanced decline line. So we've been talking about market breadth for a long time, and it's really starting to pan out here. So let's look at some of the things here that are really important. We broke the downward trend line. The breadth is very strong. And what's also interesting is when we look and we see it's been fascinating to look on a year-to-date basis. Let's go over here at the MT main workspace. And if we go here to our key ETFs, if we look on a year-to-date basis, we make this kind of open up a little, what we can actually see is on a year-to-date basis, The only items that are red are XLU and XLP. Actually, XLV, I'm pretty sure is red on a year to date as well. Healthcare. Actually, I did not include healthcare here in safe havens, but you could do that. And basically, that is another safe haven. So it's interesting on a year to date. Wow, energy turned red. This was not true last night. And I'm going to talk about energy because I've been noticing right now that we have a lot of weakness building in the energy sector right now and in the oil space. But the key thing I wanted to point out with this one is on a year-to-date basis, we are seeing the risk-on sectors outperforming. We are seeing the safe havens like consumer staples, utilities, healthcare lag. So that is telling you something that is more on the bullish side than the bearish side. The other thing is the VIX. Well, actually, let's look first at the dollar index, which is I have this over on another little chart of my own that I just use sometimes on TradingView. And if we look at the dollar index, we did an article about this on TradingView a while back, has just been steadily skidding lower. And this is very interesting. And this takes a lot of this sort of fear off the table. When the market was crashing last year, the dollar was ripping higher. And at this point, you can say the dollar's oversold, or you can debate all that. But the key thing is that the upward pressure in the dollar is gone for now. It's more of a downward pressure, and it's more of a kind of sense that the panic that we saw is not happening now. Also, the VIX is going to show you quickly on TradingView. The VIX has struggled to really. I mean, 20 was a big level where it would always bounce most of the year. Now it has basically not been able to get over 20. A lot of these things are kind of coming off the lows with the market, intraday up a lot. It's kind of, whatever. But the key thing here is the VIX has been steadily under pressure. So these are inter-market signals that I wanted to show, and it's been pretty clear. And we've been talking about these, we did masterclass for a while now. The other thing is the 10-year treasury, which is pretty interesting to me. This is, I think, a very key level. The TNX, which is a 10-year treasury yield, 3.4% has been a big level here. So when this goes lower, it means borrowing costs go lower. Now, I'll just say myself that when I look at this situation right now, in my view, it's going to be difficult to see significant downside from here in the 10-year, because the yield curve is at a point where if your short-term rates are at 4.5%, and you got you've got the 10-year, more than 100 basis points below that. The curve can only get so inverted just by simple, basics. So the thing here is that we're seeing a point here where that real sort of panic is, again, of the interest rates shooting higher. All these things continue to kind of fade. So the key thing I want to point out is we have not just the S&P hitting multi-month highs, but we have all kinds of confirmation in the sector mix, confirmation in the breadth, confirmation on intermarket signals. And that's what I wanted to show right there. Okay. It's also interesting, if you just take a quick, if you want to follow this link on my article here, I actually noticed, it was back in October, Paul Tudor Jones said the 2-year treasury yield, watch that they go down. That will be a signal for the S&P. And it's not going down that much. I don't have it up right here, but the key thing is that will be interesting to watch over time. And that actually led the market to the upside. So as we head toward the next Fed meeting on March 22nd, that's going to be interesting to watch. The 2-year treasury yield will be something to watch. It's actually not a TradeStation platform, but you can find it a lot of other websites like CNBC or Bankrate or something. You want to look for that. But that's an interesting signal that Paul Tudor Jones, who's a famous trader, was talking about. Also, want to very quickly show you some other stuff here as we look at the broader indexes. First of all, pretty stunning that, can you believe that the Dow Jones is actually negative today? Look at this. Look at this $INDU. The Dow is actually slightly negative. It's pretty interesting with all the euphoria we feel in the broader market. But now look at the NASDAQ. Important point here, and I want to just point this out. We have Apple tonight, but there is a gap. Well, this is not really, if you look at the Qs, there's a gap on the price right around here. I'm sorry, we've shot right through that gap. So we were filling this gap. I didn't even realize we had taken it out. But this is just an interesting sort of point that we've gone through here. So this is kind of pretty interesting when you see when you look at some of these levels looking off to the left. Let me go. I wanted to show you something else that was just kind of interesting about the there were some interesting ways that the retracement's played out, but I'm gonna save that for next. Okay. So yesterday is pretty interesting. I was looking at like all the mainstream kind of news. It's like very, you know, like maybe people who are not really like, interested in loving and trading and stuff. They see like, oh, the Fed says they're going to hike further. Then this morning, the main articles that come out, it says disinflation. So yesterday, Powell said we're in disinflation. That's great. And basically, the market, after he said that, that was the key term. So I see someone asking for the zip file. Hey, folks, I want to show you something, and this is for yourself. I'll send it to you if you cannot find it. But what I want to kind of get you guys doing, and just for your own use, is go to tradestation.com and go to Market Insights, go to Research Market Insights. This link, well, it's on TradeStation here. If you go, where is it? I'm always going to have this blog post for you guys, just so you know. Go to Research Insights, and then whenever we do this webinar going forward, there's going to be this thing that says Market Trends. And then I'm going to have a rundown of talking points, and I'm going to have always have the zip file. If I update it, you can get it there. So, all right, let's keep going with this. So anyway, here's the thing I think we have to remember. Will the Fed hike more? The fact is, we really don't know, and that's like kind of a cop out to say, but let's really think about it. We have tomorrow non-farm payrolls. Then I think it's actually on Valentine's Day, we get CPI. Then at the beginning of March, we're going to get the next payrolls, and then we'll get another. I don't know when CPI is going to be in March, but it'll be around the middle of March. And then on March 22nd, we have the next Fed meeting. We also have the next dot plot. Now, one other thing is that this is not scheduled, and I'm not 100% sure, but the central bank, the Federal Reserve Chairman, almost always testifies in Congress twice a year in the Senate Banking Committee, and that's usually in February and August, or maybe something. Maybe it's not August, probably some other time, but it's in February. I think it's called the Henry Hawkins testimony or something like that. But Jerome Powell is probably, almost certainly, going to be on Capitol Hill at the end of the month. And so that's another thing to think about. So let's just think about all that stuff. We have a lot of data points between now and March 22nd, and those data points will tell us what the Fed's going to do. And I would say, quite honestly, there's a very good chance that the opinion will become more evident in the second half of February when Powell goes to Capitol Hill and some of these other things start taking shape. So I think right now we have hope, and now let's see if it gets confirmed by the facts. There's been a lot of positives on that. And I think it's important to realize that there are some other interesting positives happening. For example, when you look at the overall economic situation, that we see a lot of these different numbers that have been trickling through in the last few weeks. So today, I didn't put it on my rundown, but productivity was better than expected in Q4. Q3 was revised up. Okay, then we have GDP. Cost indexes in the last GDP report were positive. The other thing that is massively, hugely, and potentially important, not right away, but crude oil is looking pretty sickly. And I want to just kind of mention that if crude oil continues lower, that is potentially a big tailwind that can kick in later in the year. And I look right now, like I said, the crude oil, the energy ETF is at its lows of the day. Crude oil is actually, I don't see it on my other screen right now. It's slightly negative, but anyway, I wanted to point that out because right now the oil situation is totally unclear. When you look at all the things with Russia and all this stuff with them, exporting more and India buying it. But the key thing is that the oil market seems to be breaking lower. And if that continues, that is an interesting positive. But at the same time, the IMF raised its global growth outlook. I normally don't like what the IMF says, but it's pretty interesting to kind of see that trickling through. If you look at Carrier, they make the elevators. They came out and said, we don't see anything remotely approaching a recession in Europe. So pretty interesting to actually think about that environment here. And I want to say from a bigger perspective here, because I think that we have to actually take a step back and really realize that the bigger picture here is not just the Fed doing this or that or inflation. What really is happening is that we had an economy that got slammed by events that were so unusual for our lifetimes. You had COVID, but then you had other stuff. The whole economy shutting down. You had in early 2021, you had this insane ice storm in Texas. I remember there were all kinds of products you could not buy for months after that. That messed up supply chains pretty badly too. Then you had bird flu, which pushed eggs over $3 a dozen. Then you had the Ukraine war. I mean, put all these things together. And what's very interesting to me is that I think about the economy. You ever have like one of those pools, you have in the backyard for your kids, like one of those cheap ones that you just kind of fill up with your hose. You know, it's like 4 feet across. If you put like 2 inches of water in there, it doesn't look like very much water. But then if you pick it up on one side, all the water goes splashing and exploding to the other side. So the point is that that's what an economy is like. It's a wide spread out amount of human activity and economic activity, business activity scattered over a very wide surface, millions of companies and thousands of industries and all these different things, and it's all spread out. It's a mile wide and an inch deep. And when you suddenly grind it to a halt, then all these things come splashing up together and you get all these like things that were flowing smoothly, like semiconductors and cars and lumber, they stop. And then when you turn them on again, it's a disaster at first. It's a total mess, and prices spike and it goes crazy. So think of a kid pool in the backyard. You pick it up and you splash it. It goes all over the place. There's waves, but then you come back in 5 minutes and it's flat again. And that is what COVID was. And then on top of that, we had these other things like I mentioned. So the real story that's happening here is that we're going back to normal after 3 years of just unprecedented disturbances. And I think an important part of that is when you look at what Meta did when they went out last night, they said, you know what, someone made a point that Zuckerberg didn't even use the word metaverse. He was talking about improving Instagram and a bunch of other stuff. They cut the capex, which basically means that Zuckerberg comes back to reality. You look at all these job cuts in Silicon Valley, that all of these things put these companies back on track for more of a profitability. And that's just a really interesting environment right now. So I think the key thing now is we're kind of escaping from this craziness and going back to more normalcy. And at the same time, we're seeing a lot of things that were just like nightmare scenarios going away. For example, today, Coinbase, they were getting sued and that lawsuit got dropped. Again, it's another thing that you think the world is terrible, terrible things, and then boom, it goes away. Fear goes away. Return to normalcy. That is what I'm kind of how I'm viewing this. I know people want to split hairs over CPI this and Fed hike that. I think you got to look at the big picture. It's kind of like saying you could have bought Microsoft, on a split adjusted basis for like 10 cents, in the year. I don't know, it's not a good example, but the key point is there's a point where the individual little details don't exactly matter. What matters is the big story in markets. And the big story here is a return to normalcy. And as that happens, inflation eases, the VIX eases, interest rates ease, all those things going back to normal. And as that fear eases, the amount of money on the sideline starts coming back in, and the big money managers that use leverage start increasing their risk threshold. And all those things start giving the market more of a potential for a move to the upside. So those are the sort of things I'm kind of focused on right now. And I think it's important to see things through that lens. I would just say that the numbers don't matter as much because the kind of disturbances that we've seen in the last 3 years are really a statistician's nightmare when you see that kind of volatility. But now we're going back into a place where economic projections and a lot of these things are going to start going back to normal. And so anyway, I just want to mention that because I think it's important to have that overall view. All right, now we had today also a European Central Bank meeting that was kind of inconclusive, and let's just see everything. I mean, the euro has been trying to rally, and now it's just kind of sitting there. I wanted to just mention that from my perspective, it's going to be important to see here. Do we see a continuation of these kind of weak dollar trades? That has been a big sort of trend. People, the things like precious metals going higher and these different assets. So I want to just mention that I'm watching that. I think that's going to be an important thing to keep kind of watching. People had a lot of hope for that today. The European Central Bank came out and they basically said we're going to hike again at our next meeting, and after that, we don't know. So if they were more hawkish, it would have been, more favorable for weak dollar trades. But I think we still want to watch this because I think this is this trend of the dollar weakening, may not be finished, especially when you consider there's some evidence of money flowing into global assets and stuff this year. And we're going to get to cryptos because that is kind of interesting as well. Now I want to talk about some individual companies because we are in the kind of thick of earnings season, and there were some really interesting things to me. So Meta, of course, big jump today. Now, what's interesting to me about Meta is not only did they have a good top line, but they did a $40 billion buyback. So we're starting to see this thing of, I call it strategic actions, but when companies buy back stock, they increase dividends, and they do things like that. This stuff happening at Disney, with Nelson, was it Nelson Peltz, with the activist investor? When you start getting these kinds of companies looking to do things, shaking things up, changing the business model, or returning capital to shareholders, this has not been a major driver in the market for a long time because we've been in a growth market. But it is starting to kick in. We're seeing more of these sort of strategic actions, companies doing buybacks. And this was, to me, a very interesting aspect of what Meta did. Another one also was American Express. They raised their dividend. Now, why am I putting these two together? Because in some ways, both of these kind of have this sense of things not as bad as people kind of fear. And with American Express, we've seen a lot of these financials that set aside. Let me go over back. I have this in my my talking points. Where'd it go? Sorry. So if we go here, let me just stick to my talking points. American Express had strong guidance despite earnings miss. But what's interesting is some of these other financial stocks, they had loan loss. All these guys have increased their loan loss provisions, and the market just doesn't care. So I think it's important to realize that these guys are basically bracing for a wave of bad news. And if the bad news doesn't happen, those reserves go back into the income statement, and that is the potential boost for financials. So I wanted to kind of mention that because I think it's the financial trade here. There's low valuations, and these guys have an exposure to a strong economy. And what I think is interesting here is if the Fed pauses or even starts to cut rates, which from my perspective is not super likely, but the thing is that if they pause and then you start to have the cyclical economy, industrials, financials, the consumer stocks, look at Ferrari today. Look at these. There's so many of the industrial stocks that are flying. If that cyclical trade does well, then my perspective is that these cyclical names, the industrials, the financials, some of the materials, the steel makers, those are the areas right now that when you look at their charts and you look at their momentum, those are the areas that might actually benefit most from the Fed pausing, not the tech sector. So I know everyone loves the tech stocks, but they are rebounding from some long-term sort of lows. And some of the financials and industrials especially the industrials are breaking out. So Advanced Micro, I think we all know, had a good quarter. Their data centers remained good. And what I thought was interesting about AMD was that their PC business is weak, but there's also evidence here. If you look at IDC and Canalys, I wrote about this in another blog post. If you actually look down here, that these guys actually see the PC market improving over the balance of this year. So there are so many things that can kind of line up. I think it's kind of like it's like a game, like a sport, some kind of like football game or something, or when they come off the bench, so new players come off the bench and they're strong. A relief pitcher comes out of the bullpen when suddenly, maybe cloud starts to fade, but then PCs come out of the bullpen. And that's the sort of thing that a bull market is made of. It's like, okay, one area weakens, but now Europe's coming off the bench and boosting global GDP, boosting industrials. And that seems to be the environment we're on now. Oil comes off the bench, it drops, and that drags down inflation. One thing after another just comes out. And that's how a bull market plays out. And when you look at this from an objective perspective, those seem to be the kind of dynamics that are at play. I thought it was interesting. I mean, Metaverse was sidelined. They cut their CapEx plans. Yeah, like these industrial names to me are really important, I think, to be aware of because we have this clear infrastructure thing happening. And also, um, this country, in many ways, there's a lot of evidence of jobs returning to the United States for various reasons. And I'm not just making that. I mean, there's people saying it. If you read the earnings statement from Nucor, they said that explicitly. The big steelmaker NUE, if you look at their earnings report. So it's pretty interesting to kind of see these parts coming together, and you look at the infrastructure bill, and you look at some of the companies. And I talked about this on market on Masterclass like a month ago. But if you look at some of these stocks like Fluor, PWR, these are the engineering companies that they have had very modest pullbacks along the way and pushing the highs. So when you're going to go and build a semiconductor plant, or you're a city that's going to go and put in some massive project or bridge, the business in one way or another ends up going to companies like Fluor, PWR. And if you're going to be spending lots of money digging and building, these guys are like kind of like the mega, contractors who have a piece of that. And so it's interesting to see that sort of thing. And I want to just emphasize that because these guys are showing infrastructure being a pretty significant story. And that is something that's interesting for the industrial names. And I think that's important because everyone just thinks about, consumer, or they think about, technology, but industrial can be an important part of the market. And in fact, one of those is Caterpillar that they had. I mean, this is actually one that I wanted to cover lower down because it has a technical signal, but it went down to the 50-day moving average. Hey, now revenue beat, earnings missed. They had cost pressures, but it's pretty interesting. Here's my Keltner channel, and here's the 50-day moving average. So it's just kind of interesting. These are some of the signals that we created this workspace to kind of show. So I wanted to just kind of mention that. Okay, wait a second. Otis, they do the escalators. Very interesting. No, it was Otis. It wasn't Carrier. It was the CEO of Otis was saying just the strength in Europe. Pentair, they do like water filtration and stuff. Old Dominion Freightliner is trucking. Again, these are companies that are not super interesting. Maybe a lot of them are not necessarily good trading companies. Aside from maybe Caterpillar, but they're telling you something about the economy, and I think that's kind of interesting. Also, we have seen in the last week just an incredible move in the housing stocks. ITB is one that we have on our list here. And I think that, and we have been talking about this for a while on Masterclass, the underlying fact is that few industries or few businesses right now have as much of a clear-cut opportunity as the home builders do, because quite simply there's a shortage of homes, and you can slice it and dice it any way you want and stand on your head and say that it's bad for home builders. And I've heard so many people try and be negative about these stocks and say that there's going to be this implosion of the housing market, and it's just not happening for various reasons. And one of the reasons is bubbles do not happen close to each other. So the last time there was a true nationwide residential housing bubble in the United States, from what I could tell historically, before 2007, it was the 1920s. So when you look at asset classes, they do not have bubbles close together. You have a bubble and people get burned, and then the stupidity doesn't come back quickly. You need an entire new generation of human beings to come in and get burned again. And housing is not doing that right now. So I wanted to just point that out right now. We've looked at this, and I mean, right now at housing, I mean, when you look at things like this, they've run significantly. But this theme is probably not going to go away. And I think there's an opportunity where we want to be kind of focused on this, because as interest rates ease, it's going to be just an area that has a lot of focus. I mean, the Home Depot and Lowe's, report later. I'm not sure what any clear opportunities are here, really. One name that's interesting well, there goes Louisiana Pacific, it's moving now. But this was one that had not moved at all, and it was a Buffett trade. Buffett was buying this one. So I'm not sure right now what opportunities there are right now in the housing, but I did want to mention that this is an area that is really coming together. It does not get the attention that it probably deserves. All right. Also, I mean, honestly, this is the thing. If you are a risk-on kind of person that you like to see, Pfizer and Amgen. Honestly, these big pharma names. Look at what Lilly was doing, into last year. It was just like one of the. It kept just cruising higher, and then just today, just these stocks are getting shunned, just completely forgotten, and that's an interesting thing because these are safe havens that are just getting just liquidated and people moving away from them and moving into the technology and the industrials and stuff like that. So I think it's interesting to see that. I think healthcare will probably have some opportunities, but right now we're just in a risk on sort of sentiment. Some of these names probably do have some longer term opportunity. When you look at healthcare, it actually has been gaining. If you look here at MT sectors, and then if you look at the healthcare, you guys probably know this if you were in my master classes, but you look at XLV, this has really gotten smacked down. So this is a ratio of XLV against SPY, and it basically shows you how's it performing against the overall market. And what's interesting is over the long term, this is trending higher, which is not a surprise because of the demographic demand for healthcare. So I wanted to kind of point this out. So when we get past the euphoria of hoping for the Fed to pause or whatever we're in right now, when we get past the euphoria of Meta not stomping our guts out with another $10 billion of wasteful spending, when we get past that risk on euphoria, these healthcare names, it could take some time, but these are areas that have long-term stories and they have a long-term thing happening. So I think we want to just kind of think about that. But you have to also be careful when you're early in a calendar year and a sector is an old leader that gets liquidated. That is often problematic. I think it's especially problematic if your ticker is XLE and you drill holes in the ground to pull out hydrocarbons, because this has been the leading sector. The energy sector was the leader in 2021 and 2022. And this year it feebly tries to rally, gets back under the 50-day. And when you look at it, this is now potentially where technology was at the beginning of last year when everybody owned it and people thought it could never go down. And then it gets liquidated to buy other stuff. And energy right now, might have some risk of that. But this is interesting to see this. I mean, I hadn't even noticed this before, but we have a high, a slightly higher high, and then a lower high. I mean, technically it's not a head and shoulders, but it's the same idea. So there's another thing about XLE. Let's do like a weekly long-term chart. There is a level here that's, well, actually, no, I thought there was. I mean, this level from 2014, we never reached. But still, if you look at this on a weekly chart, I mean, this does not look, I mean, if you're looking for something that is stalling, this is starting to have that look. So my perspective here is that energy is, under pressure, and that's a good thing for everybody else. How do you import your Excel list of ETFs? I honestly am not doing that Excel list right now because it was hard to keep it up to date. So what I can just say is a lot of these Excel lists, what I did was I used to take like SMH and XLE and I put all the holdings into a spreadsheet, and it was useful, but I just wasn't keeping up to date with it. And I know it was too difficult to always do that. So I didn't want to be giving you guys stuff that was no longer accurate. But what I, suggest or hit, say might be an interesting idea, and I've done this, myself in various ways. I just take a spreadsheet, and I mean, I'll show you what mine looks like if you guys are new to this. Where is it? Let me find it. Symbols, here it is. So this is what I used to give people. And it's, like I said, this is not really been up to date. But what I do is I just keep it like this. Okay. So I have like an ETF and then I have its holdings. And this way, if I want to see, wow, XOP, this is like the energy thing. And, I go over here and you go to price grid, select all, delete, paste them in. And now I can see, oh, who's doing well, who's pulling back. I mean, right now, energy looks bad. But see, even these already are like companies fall out of it. Like these don't exist anymore. So that's why I stopped doing it. But what I would suggest maybe you think about doing is keep it yourself. Find the ETFs you care about, have a spreadsheet like this, put a break between each one because it makes it easy when you're just shooting around to just hold down Control Shift and arrow. And then if you're saying, oh, I want to see the semiconductors, Control F, SMH, boom, copy. So now I can look at all my semiconductors and see who's doing the best in the last week. I can go to my MA tools and I can say, oh, who's pulling back and touching a moving average. I can see, oh, it's interesting. Texas Instrument is the 8-day or exponential or something. So that's just kind of a hack that I have, but I'm not going to be doing that ETF spreadsheet anymore. So if you want to just do this, put back in, go to data, add symbol list, S&P 500. Now remember the workspace I've given you guys, that is the S&P as of last week or something when I created it. So over time, if you're using that workspace, you might want to occasionally erase the holdings and then re-import because the spreadsheet does change. In fact, I want to just point out STLD was added in December, Steel Dynamics, and then they come out. So from my perspective here, these steel stocks are really interesting. Nucor and STLD are the two in the S&P, but you also have Commercial Metals, CMC, and you have RS, Reliance Steel. So that's just kind of interesting. From my perspective here, this industry has been kind of left for dead, and it's coming back. And with the infrastructure spending and everything else, this area is benefiting. So I want to mention that because you can probably watch CNBC or read a bunch of other things all day long, and no one's going to tell you about the steel makers. Okay, Mr. All right, if you Jim, if you don't have the ELD, let me know. Like I said, go to Market Insights and go to this blog post with the Wall Street sign on it. And if you don't have it, I'll help you. But I want everyone just to know where to get it because going forward, this blog post will have the downloads at the bottom, the zip. Another thing, a few things I want to just very quickly mention, looking at some of these other ones these were, before the last week, but PACCAR, CMI, which is another truck maker, reports soon. In fact, I want to do something right here. If I go to MA Main, if I go to studies, add study, I'm going to go to EPS. I'm going to go to, actually, it's called next earnings date. Okay, next earnings date studies. I'm going to add it. I'm going to add it to the chart. So it's going to be right there for me. And that tells me this company reports on, it's going to come through in a second. So you can do it that way and you can adjust it. I like making it better. I can go to edit text. Let's move it a little bit. Let's go to inputs. Instead of having it 100% from the right, I like it at 70. Then it's kind of a little bit off the left side. I'll make the font a little bit bigger. Okay. Boom. And now we see they report earnings soon. But the thing is, trucks and things like that. There is a massive upgrade cycle happening now with diesel trucks because of some environmental rules. And I think it's interesting to realize that the ESG story, everyone talks about solar, but a lot of the companies that are riding this ESG wave are not what you would consider traditional green energy stocks. They're companies that make wire. They're companies that make industrial goods and more efficient fans or whatever. And there's a lot of this stuff happening. And when you dig into things like CARR, TT, these are air conditioning companies. These guys have an exposure to that. And when you read their press releases, they just say ESG this and ESG that and green energy this. And in various ways, say you own a building or something, and you change your environment, your HVAC, and there's ways that people now are profiting and getting credits and things on large commercial levels from upgrading and fixing these things. So the thing is that the companies that supply that are doing well. And it's a new part of the market. We're not used to thinking about companies like Caterpillar and Carrier and Otis, and but these are the areas now that are kind of benefiting. All right, so I mentioned Coinbase today was kind of interesting. They had this interesting news, and it's interesting to kind of see in any scenario when you have a nightmare that goes away. People had this horrible fear of all the bad things were going to happen in crypto, and it's not happening. Also, in the consumer discretionary side, not a lot of attention either, but Harley Davidson, Ferrari, very interesting what we've seen. We saw the same strength in things like General Motors. We obviously have seen in Tesla. So I want to just point out with Tesla that jump over now to TradeStation's articles on TradingView. So if we go to TradingView, I'm going to share this with you guys in the chat. I should actually just put this into my blog post as well. But can Tesla reclaim 200? What we were looking at here was the 50% retracement in this level here. But I just wanted to point that out. 200 is an interesting level, to be watching for Tesla. So that's kind of on my radar. But all of these are a kind of consumer. It's the consumer discretionary is the term. You don't want to talk about tech necessarily with Tesla or even the NASDAQ, because you have GM, you have all these other automakers moving, and it's interesting. What was interesting to me also was that this auto parts maker, APTV, where did my chart go? Sorry, APTV, they came out, they warned on forward results, and the stock just keeps jumping anyway. This company makes auto parts. So right now there's something happening. They had earnings this morning. So the key thing is there's something happening right now with autos, with consumer discretionaries. All these are cyclicals. And this is what I'm saying. The traditional cyclical areas, industrials, materials, but also consumer discretionaries. As people say, the Fed's going to pause. The money seems to be going to the traditional old-fashioned businesses just as much as it's going to tech. And the thing is, it was going to tech it was going to these names for longer. Caterpillar hit a 52-week high like a week ago. Apple has not made a 52-week high in a long time. So when you look at some of these sort of things, and I'm not saying necessarily the tech stocks are going to just do horribly here, but what I'm saying is the momentum and the real sort of technical patterns favor the industrials. Look at this. Look at Apple versus Steel Dynamics. When you look at this is what I'm talking about. So I think this is what I mean, where as the Fed pauses and people look for this post-Fed reality, that focus will be on the traditional cyclicals. And another thing that's interesting, I want to just mention this, is that we've had all this stuff with ChatGPT. What would happen right now if it turned out this is not Dave Russell? This is actually an AI bot talking to you about the market. It'd be pretty cool. And that's kind of where we are right now with this excitement over ChatGPT. So we're seeing this trickle into the market in a few ways. NVIDIA was the big one, then AMD, Microsoft with its involvement in OpenAI. Two other names popped up, at least two. One of them was Cloudflare, which apparently has an AI exposure. And another one was Baidu, which is the Chinese tech stock. So I want to just point something out to think about. Imagine if I went back to the year 1980 and I told you need to buy anti-lock brake stocks. Everyone would have said it was silly. And my point with this is that AI is probably not going to be a lot of individual stocks. If you're a software company, you're going to integrate AI in different ways into your products. AI is going to be kind of like, it's like anti-lock brakes. All the cars are going to have them. All the cars have electric windows now, and in the future, everything that needs AI is going to have AI. So I think we just need to be careful. There's going to be this craze over AI because somebody wrote a doctoral thesis or something with a chatbot, and that's amazing technology, but it doesn't mean that it's going to be a sustainable trade. And I think that's just an important thing to realize, that there are massive software companies out there that can engineer something pretty similar to these individual products. So to think, I remember, in fact, 10 years ago, everyone was talking about self-driving cars, blah, blah, blah. Now, if you had just bought NVIDIA and not tried to mess around with Mobileye, you would have made a lot more money in the last 10 years. So my point is just, they were talking about, Mobileye back here, and Nvidia basically went from like, $5 to like 400 or something. So the thing is it's nice to talk about these kind of cute little technologies that sound great, and they will have an impact on our lives and they will have an impact on business, but it doesn't mean that they're a coherent investment thesis. And I want to point that out right now. We need to be careful of getting sucked up in this sort of buzz over AI changing the world of investing. I mentioned Eli Lilly. It was nice to see. This stock was like, such a safety play for people last year, and it's just seeing it break down like this sends some interesting messages. All right, basic points when we make, which is growth stocks have recently reclaimed leadership over value. One of the ways we can see that from the TradeStation platform is if we go to the key ETFs on this on the MT main tab, and you can just look here. I have a growth versus value comparison, and you can see that in the last 21 days the growth ETF is leading over the longer term on a year to date. But if we were looking at something over the longer term of like 12 months or something, that would not be the case. So it's interesting just to see the IWD gaining share over the IWF. How do you get the key ETF screen? All right, you want to be looking for MT main workspace, and then there's something called key ETFs. So I have a series of workspaces here. Ask me again in a couple minutes if you don't figure it out before I end the webinar, and I'll make sure you know how to do it. Okay, so on a year-to-date basis, we see a lot of strength in things like the Chinese tech stocks, semiconductors, and that's interesting. But what's interesting to me also is like the airlines and home builders. Actually, home builders are actually consumer discretionaries as well. So you think of Tesla, but home builders are in the same bucket. Airlines are industrials. Okay, so energy is starting to lag after a strong 2022. So I actually did this thing on a trailing 3-month basis, which is 63D, which is 63 trading sessions, which is going to be 3 months because a month is 21 sessions almost always. The only sector that is negative on a trailing 3-month basis is XLE and XLE. And now with the drop in XLV, which is healthcare today, it is also. But it's interesting in the trailing, listen to that. In the trailing 3 months, the only negative sector as of last night was energy. So what killed us last year was energy. So how did last year's bear market begin? With a breakout in energy. And now we have a breakdown in energy. So just some interesting little tidbits to think about. All right. Is TradingView free for TradeStation clients? You can set it up for free. It's going to be a limited access, but you can set up a kind of basic usage on it. Now, the other thing that's interesting here is the cryptos. So we did a post on Market Insights about the some of the things happening in Bitcoin recently. And the thing that kind of grabbed my attention that I wanted to mention was what's starting to happen in Ethereum. This right here. We noted this earlier in the week that this crypto index is going bullish. But let me jump over to my TradingView. What I like about TradingView is you can compare Ethereum to Bitcoin. And to me, there's a very important thing to look at. This is a daily chart of the ratio between the two. And what's interesting here is that, it is at least, maybe it should go, it's interesting kind of basing pattern. When something holds for this many days, I always try to look for flat lines. You draw angles, you draw trend lines, and it can often cause frustration. You say, oh, it's going to hold, and then boom, it goes right down to that low. I've seen that so many times, but in this case, it really did hold. It's pretty interesting. But this is a pretty, this is like an area where you can see the potential here for this ratio of Ethereum versus Bitcoin to kind of say, you know what, it has pulled back to this lower range. And if you look at it on a weekly chart, this is a pretty kind of, this pattern here is something of a kind of tight kind of ascent here. And, if you look at this, this is just, I think, kind of interesting from a long-term view. So what I would just say is now it's kind of interesting to kind of be thinking and seeing, does the market kind of widen its view not just in something like the bounce we've seen in Bitcoin, but does Ethereum now follow? And so I think that's kind of the next thing that's going to be kind of on watch for me. All right, let's go down to the section called Signal Scan. All right, so I have, I'm going to actually just talking about, so I can quickly zip down it. You guys can look at this yourself. I'm going to jump back over to my TradeStation platform and show you some of these things I came up with. Now, I'm not going to show you how to use Scanner today, but I will do it in a future webinar. I'm going to give you the basic kind of clues of how I started with this. But I did a scan and I was looking for Keltner channels. These are Keltner channels. I changed them just so you know to dotted lines. When you load them, normally they're solid colored lines. But for me, that confuses me because they look like moving averages. So you go to Keltner channel and you can change them with the style. But when you import mine, you're going to have it set up like this. So anyway, look at AU. So here's what I was doing. I was looking for stocks that had the 8-day moving exponential moving average above the 21-day exponential moving average. And I was looking for stocks when the 8-day was above the 50-day. So the idea was, and then the other thing I was doing was I was looking for stocks where the low of the day, and I ran this scan last night, but the low of the day was under the Keltner channel. And if you actually look in the blog, that's kind of how I show you how to create that in Scanner. This is I think a South African gold miner, but gold and precious metals have been moving. So like I said, one of the things that's kind of interesting to me is this week, everyone's excited about Apple. We have Apple after the close. We have Amazon after the close. There's a lot of excitement on tech. But I'm just curious, what happens after the close? Not after the close, but what happens next week? Do people come back to gold? Do they come back to the weak dollar trades? And that's something I'm kind of watching here. And this one came up on my list. So this was to me an interesting signal to view in that context. If we look over here on our key ETFs, we look on a year-to-date basis. Let's see what is actually doing best on a year-to-date basis. You know, semiconductors at this point are top, but gold has also been pretty high on the list. It's had a decent pullback in the last like 2 weeks here. You can see it's weakened in the last 2 weeks, but gold has been outperforming. And if you look at it on a longer term, like a trailing 3-month basis, gold has definitely been outperforming. This is the Chinese internets. See, semiconductors have just actually pulled ahead in just the last like 24 hours. Home builders have just pulled ahead. It's pretty interesting to see those. So, I mean, this is actually, it's going to be an interesting question to see, are we done with gold and silver? Maybe we are. But from a pure momentum, trend following view, this is something here I think to kind of look at and watch and wait and see. And, you know, from my perspective, when you have something down at the bottom of the Keltner channel, the risk reward is more, you know, potentially favorable. So this was one that popped up on my scanner last night. Some other ones that are similar, what I did was also I looked for stocks. I simply scanned. You can see here on this well, in this here, I was simply scanning for stocks that were 8-day above the 21-day. It's just a simple one, and then they were just down a lot in the last week, for example. And one of those that came up on the list was, I'm sorry, it was BABA. The Chinese internet stocks have really been moving recently. And when you look at a pullback like this, I mean, like I said, for me, it all comes down to weeks and thinking about our time periods. You know, this week is all about big tech, but our time periods here are going to be interesting to see if we stabilize here. Do some of these you know, these pullbacks actually turn into something interesting? Freeport-McMoRan, it's a copper stock, been, you know, also in a similar situation where it's pulled back. Now, remember, this was based on a 5-day pullback. Some others that I'm watching are GFI. It's another gold miner that came up on this list. But again, these are just some of the signals and things I was looking for. Another thing is Caterpillar. Like I said, today it would have come up because if say we just really quickly show you how to do this, go to MA Tools and let's just just bring in the Dow so you can see it. Go to symbol list, Dow Jones Industrial Average. And now let's look here for the 50 MA test. Boom, Caterpillar. So you can do the same thing for the S&P 500. And it'll do the same thing. If you click on the header and you just click on MA test, then you can see everything that is testing the rising 50-day or the falling 50-day. It's very simple. It's not an end all be all. The 50-day is not like some magical thing. I've seen things slice right through the 50-day and not be a lot of fun. But, you know, it touches it, it sits, it pauses, it waits. And again, what happens if we get into a new week? It's also at the bottom of the Keltner channel. This could be a name where people, you know, when we get past this excitement, people suddenly say, hey, wait a second, you know, this is interesting. Caterpillar still had good revenue. Interesting. So another one that popped up on my list today I was looking at was Deere. This is a similar name as well. It's under the Keltner channel. They report earnings later in the month. You know, there's actually kind of a channel here, it's a descending price channel that they're kind of at the bottom of. If you actually kind of, this one popped up. Also, Keltner channel scans can be pretty interesting. You know, it's kind of near the bottom of this 100-day moving average, and this is the Keltner channel. It's under that Keltner channel. But actually, this one is different because the 21-day is under the 50-day. So this is not necessarily as bullish, but it is also at the bottom of the Keltner. I was just watching this because the real thing that caught me with this was its competitor, Case New Holland, CNHI, which also makes farm equipment, had a bad quarter. And I was just noticing things that were moving, like Caterpillar fell on bad earnings with good revenue. That's an interesting story. Deere had a good earnings here, but then their competitor knocked them down here. Interesting thing to kind of look at. Another one that was interesting that popped up to me was Delta Airlines had a bullish outside week. And, you know, the airlines here have had a very tight consolidation pattern. If you look at DAL, you look at UAL, they've had a very tight consolidation pattern, and there has been money going back to travel stocks. So that's kind of interesting. I don't really have time to get into Align Technologies, but this used to be a kind of, you know, very dynamic and explosive growth stock. And it could be interesting to kind of see, you know, at this point, you know, pretty crazy jump, but interesting to think of a name like this actually does kind of get its business back in order. The other thing I'll just add is the next week is pretty quiet. And so it's going to be more of a kind of wait and watch, but at the same time, there's not nearly, you know, there's not a lot of stuff that seems like it could really terrorize the market, at least nothing that is scheduled. The last thing I'll add is, you know, I have this thing here. If you want to read my thing about doing Fibonacci retracements, the last thing I'm going to do very quickly is just show you if we do some Fibonacci retracements here. Look at the S&P 500 and sorry, SPX.X. Let's do it on a daily. All right, so let's go to drawing Fibonacci retracement lines. Boom, boom, 50%. Now, let's go from this low, right around there, to this. It was to this high at this point. If we zoom in, you can see what I'm talking about. 50%. All right, so look, we rallied, pulled back 50%. This low, 3,800 is 50%. Then we rallied in January, first half of January, pulled back, held 50%. Then let's draw this line higher up. What did we do? We went up. I'm trying to think where it was. From here, I'm kind of doing this in a really fast, slightly sloppy way. But what's interesting here is if we look at this on like a 4-hour, like a 60-minute chart, let me do this better. All right, look at this distance from here to here. We also held 50%. So this, to me, is working better than other indicators. We're just seeing 50% retracements and continuations. And so that's a kind of interesting thing. I highlight it in that tool, but it's kind of interesting. So it's great to talk to you guys. I will see you again next Thursday. Don't forget, please go to Market Insights for more information, and I'll see you again soon.